Okay, so let's take a look at what happened today. Now, the first thing always to go over is to take a look at what we were doing Friday into the close. If you remember on Friday, I was pretty adamant about the market had establishing that bullish idea. I think it was pretty clear that the bulls had showed us their intent, and the market participants had said, this is where we're going. This is what we're doing. And I didn't think it was ambiguous. I didn't think it was vague. I thought it was very clear. And that was the way I was thinking into the close on Friday. So looking at today, what happened? Well, the first thing that I think is really interesting is that tension moved right down and gave us a zero test in the morning. This was a bullish zero test. So which, if you remember, we had a couple of situations here with tension back and forth a couple of times, and the bulls were able to hit and defend and show their interaction with the market through these times, where the bears came in here and they gave it a try yesterday at the open. It pushed the market down, but they failed to dominate. They got pushed back, and the second time when it pushed back up, they just didn't do anything. It was pretty clear that it was over. Well, today the market pushed right down and gave those bulls another chance to try and impact the market, defend tension. This is really interesting, and it's going to play a role in what I think is coming up going into tomorrow. So first thing, right off the open. Well, as it dips down, we get decay coming down, and it dipped under zero just a little bit there, and here's our trapped orders. So we have it crossed over, and there's the trapped orders, and right in the face of that is decay going positive, and there's the trapped orders. So the bears have a chance to hit, and the bulls, and they're basically face-to-face here. And this is important because you've got these two parties face-to-face in a situation where I think the bulls have already established their dominance. They've already made it very clear over the past few days that they're in control of the market and that they intend to drive this up. Well, then we have a bullish test. So what you could say is that right here, the bears decided to hit. They drove this down. Tension moved down. And if you remember that we sort of had a similar event like that Friday, where there was a zero test here near the open, and they sort of hit again there. So we get them at a very similar area here, and it pushes the market right down and gives these bulls just everything they need. They have a decay, they have a liquidity. Using this, they have zero test right here. So they have all the things that they need to come in and show if they're going to continue what they started last week. The bulls hit, but they don't impact 30-minute tension. Now, daily tension, on the other hand, you can see takes off. So this position right here is keeping that daily tension. It's keeping it over zero. They are impacting that. They hit this liquidity. They hit when this goes over zero. This is a really good moment in the market where you can see the bulls showing up to do what they told us they were going to do last week. It takes off, and of course, this position gets turned upside down. At this moment, there's a big issue. The bears are here. The bears are here. And a few other times from earlier that I'm not even going to look at. And the issue is, what are these bears going to do next? What are they going to do? Well, you know how to pump tension. And that's what the bulls want to do. They want to curl tension up, get tension as far. So what are these? If you want to curl tension, you take out the counterparty. And so if we mark that here, it's about here, it's about here, and I believe there's another position here. Well, I think that the bulls have defended successfully. They hit. They did a great job. They did everything we were looking for. This was clear-cut, clean activity by the bulls, and it's longer term. This is 2 or 3 days worth of analysis. Look at this. If these bears and these bears are, if these guys had dumped their position, tension would have curled up. I mean, look at, you could see how tension will curl and change direction. So it would have curled up. You can see there is no curling up. A little bit maybe right there, but these bears are holding. And I don't think this is bears exposing themselves to a higher level of risk because some event that they see coming in the future, which I don't want you to mistakenly think that. This is the bears making a fundamental error in analysis. They are holding their position after the bulls have completely established what they are going to do. This is going to continue against the bears, going to turn their pockets out until they let go. There is no redemption for the bears here. It's going to keep going until we see tension really curl up and move higher. These bears are bag holding. They're holding on. They think they're right. They're clearly not, and they're not letting go. That's what we're seeing. Well, as the market starts to move up, and you can see, we get up, we make a pivot, some things like that. It finally sweeps up right about here. You see price popped up. The bears were like, oh my goodness. We had sort of the drip and rally idea, which the drip and rally. That's where you get that position. We have that position, and you can see the market dripped down right here. See that sweep down and then just makes its way up, and then before it's too late, shoots through. So it pops up, and right here we get velocity. Takes a while, and it samples. You can see that crosses over zero, and here's the correlated volume right there. The bears have another chance. They have tension down under zero. The bulls haven't curled tension, but this is a big problem. Look at, this is a loser, this is a loser, this is a loser, and now they're getting another position to come in and try and hit, right here. That's adding to a loser. It is the worst thing you can do. So the bears get liquidity. It is a horrible idea. They should not hit, and they don't. And you can see the market switches back and samples the bulls right here, and then gives us another bullish sample right here, and the bulls hit. They hit, and you could see with tension that it's sort of flattened out. So again, these bulls are using a light foot here. They have these bears upside down and underwater. So I think these positions are lighter. They're not impacting tension. So you could look at this and you could say, well, I'm seeing they're hitting and they're trapping this position upside down in this position, and they're moving against it. So I think what's happening is that the bulls are essentially filling some orders here against the liquidity, but they're not doing a full market-wide thing. Otherwise, we'd see tension curl. And they're going to just continue to sort of fill that bid until these bears let go. And I think at that moment, we're going to start to see the impact, the full impact of the bulls start to come in, and it is going to hurt. These bears are making a really big mistake. So them holding on is not a good idea. So we see that, then you could, track this here as liquidity, but there's no way. If they didn't hit this one, they didn't hit this one, and they're underwater from here. They've shown us their intent. They're like, we don't want to participate. And they don't. And the market moves up as we get closer to the close. There's just not a whole lot to be done. There was some stuff early this morning, which was the decay moving down, just getting under zero, giving us that sample. There was the bullish zero test right at the open, and that was about it. It clinched it. It was in stone. The bears were upside down. They were in a bad position, and there's just not much more they can do. The bears have one choice. They can do one thing. They can take a loss, or they can take a bigger loss. Those are their only options. There's not a third thing. There's no three options. There's just the two. They can cover and just take their loss and say, okay, we were wrong, this is a bad idea, or they can take a bigger loss and let this continue higher and higher and higher until they do let go. Those are their choices. And those are the only two things that I'm looking at right now. I just don't think that anything else really is going to matter. So going into tomorrow, we can move these positions around a little bit. So I'm going to scoot this one over here. We have the last bearish position sample right there. And then we have the one from this morning where that they really did hit, which is about here. So this is where that they actually hit. I'll get rid of these. They actually hit, you can see, and they impacted tension. They did everything, and it just failed in their faces. So these are going to be points that are going to matter in the future, if things do come back down, this would be a spot to get to, because this is them getting trapped in and just holding on, holding on. Now, there is one thing I want to point out. If the market does come down and open about here, so let's say all of these positions get redeemed, it moves up, then this was an extraordinarily high amount of risk. It wasn't like a couple of points. It wasn't just a little fluctuation before things go. This was extraordinarily high amount of risk. It was fundamentally stupid. It was wrong. It was the wrong decision. If it comes down, I have to point this out. If it does come down and we do see this position get put in the green and we do see this position get pressure, that would concern me quite a bit, actually, because these bears are stuck upside down. And if I were a big institution, I would not let them out. No way. I would keep going until they hit their margin, they get blown out of the market, and that is the only thing I would do. I would not recharge my position. I would not refill at a better price. I would keep this going in one direction, just as far as I can go before that they let go. That's what I'd be doing. So if this does come down, I would take that as a major failure by the bulls. A major failure. It is just incompetence, which I don't think we're seeing. We're seeing them show up. We're seeing them hit. So we're not like seeing things that lead me to think that's true. It's just important to understand that's the risk for the bulls. If this comes down and gets to that point and pressures that position, then I would say you're incompetent bulls. You're foolish. You did the wrong thing. You had them upside down. You had them against the wall and you failed. That is a major multi-week trend that you just dropped. So that's what it would take for me to really change my position. We would need to see this just tank overnight, push through the intraday low, put pressure on that, and then open somewhere down there. And then I would be like, you guys just majorly messed up, which I think would be an enormous amount of effort, which I don't think the bears are going to give us because they're already in positions and they're upside down and they're doing very poorly. I think this is going to continue to rise in this direction until tension really curls up. And I think tomorrow we're going to see something like this and tension is going to move up and we'll get a little bearish zero test here. And then we're going to get, that's the next event to really pay attention to, is this one. That's what I'm anticipating coming up next. We keep going till we get a bearish zero test. And then the bears can show us, what are you going to do? And I just don't think that's going to happen until they get blown out of their position. And that means more up. So that's what I'm expecting going into Tuesday. We got everything we wanted today. I think today was pretty actually simple. We saw the market open. We got our zero test. We got our liquidity. The bulls had really established themselves last week into the close. During the overnight session, point this out. Let me show you. I'll actually open up some of the charts because I posted it on Twitter. I want to show you guys what I was looking at, like actually physically looking at, not just tell you what I was looking at. So I pulled up this chart. And overnight, you see we had this aggressive move down, which I didn't anticipate. So this was sort of the lows here. It pushed down. We got a low a low pivot and then push new low. And at this moment, I was looking at this velocity number. There's a little number that shows up right here. It was -9. So for a big old sweep down, you can see easily 20. It got almost 40 points out of the sweep. For a big old 40-point move to just see a -9 on the velocity, I was like, that's not big enough. It should have been like -60 or something like that. Something higher, more aggressive. Like right now, if you look at velocity, you'd say, oh, this is not very aggressive. We got room to move this up. We could go up to 50, 60 area. We gapped up. We could get to 120 at the open tomorrow if we did something aggressive. So seeing a -9 was just not very impressive. So when we saw that move down overnight, I didn't think it was a bearish thing. You could see the statistical advanced decline didn't really support that this, because if you remember, the idea here was that if it pushed down and was able to blow that out, it was going to be a big deal. I was expecting fireworks, lots of numbers. I thought if this pushed down, it was going to fail. The statistical advanced decline should have been down here at like negative 3,000 or something really aggressive. The velocity, the overnight velocity number should have been like negative 60. But it pushed down, pressured the position overnight on a Sunday. A lot of people weren't watching markets. And it just looks really tame. And so I remained bullish. I thought it was going to come back up, and it did. It did. So we established that bullish mentality on Friday. That was the thing that gave you the big ticket here. It was to say, this is bullish. We see that. Then overnight on Sunday, there was a big opportunity to come in and get into some exposure, some risk exposure for a bullish move. And the market opened today a little higher. I'll just minimize that. A little higher, and immediately gives us some pretty clean signals right here in the low. I thought it was great trading. I thought this was really good. I thought it was pretty straightforward. There wasn't much to really do today. You had the open, and then the expectation was to see this push up and push through. If you remember from Friday, was to see them push up and push through this position here, and then up higher. And, let me mark it so you can kind of see how that played out. See, so we got up right here, and right here, and we had these little ranges as we tried to figure it out, and then it blasted through that. I think it was pretty clear that's where we were headed. Gonna pressure that position. And now what's carrying, so getting to this sweep up here had to do with that pivot level where those stops were at. This has to do with the fact that the bears are not letting go. Otherwise, we would have stopped there and then started to relook at things. This kept going because bears said, no, I don't want to let go of my position. And so the market said, fine, hold it. Just hold it for the rest of the week, for all we care. So John is pointing out, he says, interesting to see the bulls have little impact on 30-minute tension. Yeah, and he said, bears refusing to let go. Yes. At this point, for this narrative, for this day, that looks to me like the bears are making a horrible blunder in their strategy. They messed up. They should have let go. This isn't going to stop until they do. So I think that the trade here, the best thing to have done would be to have figured out the narrative, seen the bulls come in and hit, pick up whatever tools you have, and try to take advantage of mostly this section here. Getting that to pop up after hitting this pivot was really the objective here. And then if you got to that point and then you saw that the bears were not letting go, then you could have said, well, I think this is just going to keep going until we see a nice curl up. And that would have been the thought process that you needed to have to go through that. And now at this point, we're still in this until they let go situation. And that's why on Tuesday morning, I'm still expecting to see the market pressure these bears. They made a big mistake. They should not have held on to their position. They should have let it go. They should have let it go right here when the market turned them all upside down and now they're underwater. So that's where I'm at with this. Going into, tomorrow and through the next couple days, I think what's happening here is we're seeing an established group of traders reassert themselves. We're seeing the bulls. They set up positions. They built the narrative. They got into the liquidity. They got the bears to be the bag holders over the past couple of trading days. And then they're running those bears into the ground. And as the market moves up higher through the next couple of days, what we need to see is to continue to see more of the same. We need to see events that keep these bears, the people who shorted here, we need to keep these bears believing in that story. We need to keep them going. Give them some hope. Give them a story. Give them a little edge. The issue that the bears are really going to run into now is that if tomorrow we do get this to move up and the bears essentially let go of their position, there's no elasticity. We could see this pump all day tomorrow up to negative 70% counter, tension. before the bears could even consider a move in their favor. They are so exposed to risk right now. Now, it could be that the bears they see something and they're exposing themselves to an insane amount of conceptual and financial risk. It could be that. But until I actually see that play out, I'm not going to believe it's true. I'm just aware of it. And I know what it takes to break it. They need to move it down. So I understand that. But this is really the risk that the bears are running right now, is the fact that tension could move all day tomorrow. No problem. And that elasticity is just a silly dream. The bears aren't going to get an edge through this. So if they are going to come in here and they're going to whack this down, and it would devastate the major trend. Like, because the bulls established, they hit, they took off, they've trapped the bears, they have everything they need. It's beautiful, it's perfect, it's in play, it's going, it's running, everybody's winning, we're all happy. And then the bears, if they did come in and take that, I would take that that would be very important to me. I'm not going to see that until it actually happens. So this sort of thing is very difficult to take advantage of. And the reason is because it's illegal. It is not legal to know insider information, at least for most of us. If you're in, like the Supreme Court or something, they're allowed to do it. But the rest of us, we're not. So you're not allowed to have insider information and take advantage of it in such a blatant way. So it's hard to take advantage of these moves because you need to know that information that you're not allowed to trade, and then you need to trade it blatantly. I don't know how you would do that. So I don't see a way to really capture this type of thing. It's insider trading. You're not even allowed to do it. So if they did expose themselves to this risk and you did try to take advantage of it, it's very difficult to do because the thing you need to know, you're not allowed to know. So that's why I find that to be sort of difficult. It is something that, as you track, tends to have larger implications. So you can see it happen. You can pick yourself up and say, okay, now we know what's coming. And then you can get an idea about how the market's going to play out. And we've seen this before. We've actually seen times where the bears come in and they insider trade and they hit the market down and they try to use cheap tricks, and it doesn't last. It just led to the market going right against them and moving 2 legs higher. It doesn't last. So I like the structure and what I'm seeing when it comes to what the bears may be doing, just to keep in the back of your mind. So if you do see it, you know what it means and how to react to it. Otherwise, I anticipate these bears, and I mean this group here, I mean this group here, I mean this group here, all getting blown out of the market, and we see tension pop up and shoot up through zero, and we see this tomorrow. That's what I think is going to happen. But keep both narratives in mind, or both streams of reality in mind. So if you do see one start to coalesce, you can go, okay, I know what this is. I see what's happening. I just don't think it's going to happen. I think these guys made a big mistake, and I think this is moving higher. I think it was set in stone last Friday, and today is it's just playing out. There's just not much to do. Just watch it play out. So let's take a look at what this kind of thing looks like on a volume profile. You can see we had expansion overnight, and we tested, we never got over zero. You can see the green continued, and then right here, point of control popped up, and the market re-expanded, and that's where we are. So we're in this, and you can see as it expands, we're finding these little chunks as it moves up. We're finding these chunks of volume. So the points to really pay attention to at this is here and here and here. These are the LVNs, or the low volume nodes. And I think they tend to be the places where prices has reactions to that are really just easy to spot. But I don't think they're good at telling you what's going to happen. They're just good stopping points for things to potentially happen at, like, turnaround or something like that. So if it does get down to those areas, these are things to watch. But you can see as it moves, we're finding more and more volume at higher and higher prices in these little blips. I think if the market stays right here, this point of control could find more volume and it could move up, and it just keeps finding people to trade. There's people trading. It's going to keep going. So that's what that looks like. In terms of the inversions, you can see it just, this one sort of got over. Finally, it had a retest that held, popped up, it cleared. Reset, popped up, it cleared. It reset, popped up, and cleared. So this is cycling really fast. It's just blowing people out. It's not a standard inversion. I would have rather see this inversion start here and then continue up and then get blown out maybe into the close or something like that. But you can see how it sort of worked. It sat, it finally retested, got above it, blew out. Retested, blew out. Retested, blew out. And that's the pattern over and over. This is just really quick, and it did a bunch of them. And these are sort of low. I mean, usually you get inversions off of like over 1,000 or something like that. Or so these are sort of low numbers. We could see this just pop up tomorrow, give us a 1,120 on the open, and then price comes to here, and then we get inverted and it pops above it, and it just keeps going. We get a gap and go tomorrow. That would be devastating to the bears who've made horrible decisions. So in terms of that, that's sort of how it works. We saw a couple of those inversions clear out and reset over and over and over, and that's the kind of thing you'd expect in a market like this. So that's where we are. Tomorrow, gap up, watch tension. The next event for everybody to watch, tension getting to zero. This is the next thing to pay attention to, is that event. So hope this is useful. I will see you guys tomorrow.